Is Tuesday, March 24th. It is a few minutes after 4 o'clock, 4:15 to be exact. And we are here with another edition of Chart the Markets. My name is Mark. I'm from BluntHouse Technical Analysis. And what can I say? I wish I could say I spent all day at my screens today, but I did not. And I am going to be learning about today's market just as much as many of you may be doing. But you know what? That's okay. Nothing can surprise us because in here we learn to speak the language of the market, right? That's how we communicate with our charts. We just listen to what they tell us and interpret it appropriately based on a handful of very simple rules. Now, what I would also like to do today, as many of you know, we use a few scripts here on our streams, and one is our signal script that has the trade management built into it, and the other one is our Z-score dashboard, which you see down here, which is measuring relative strength. So what I think I'm going to do today is to what am I going to do? I think what I'm going to do is this. If you're a subscriber to our YouTube page, I'm going to select someone today out of our subscribers, and we can certainly use more. So get yourself in there. You got a pretty good chance of winning something. What we're going to do is I'm going to give away 30 days use of the signal script with trade management built in, and 30 days of the Z-score dashboard. And we're going to do that as two separate awards. So all you have to do is subscribe to our YouTube page at BluntHouseTA, and I, at random, will select some lucky winners. Now, let's get on with the show. This is Bitcoin's daily chart, and if you remember last week, we started to get, as of yesterday, a little bit of a heartbeat, right? It looked like we were off to a new week and a nice green candle, and everything was going to be fine. And then what happened? Well, nothing really, right? If we look at this daily chart, here we produce our sell signal, and we have a confirmation of trend. In this big green candle, probably just flushed a lot of people out or got them to bite. And here we are, kind of reversing that scenario. I don't know how many times we show this, but you cannot argue with trend, right? No matter how extended, you just have to stay on the right side of the trend. And okay, on this daily chart, we're coming out of consolidation. Everybody wants to catch the perfect long, but they don't always turn out that way. And how do we figure out what's going on a grander scale? Well, get to that weekly chart. In fact, start on the weekly chart. And if we take Bitcoin's weekly, what do we notice? Have we been given any reason to buy on the weekly chart? No, not at all. And, without getting into the weeds here, this, what you see here is really interesting. So you have this, essentially a gravestone doji. It's, there's a little tiny wick on the bottom there, which technically shouldn't be there, but it's pretty darn close. And you wick the T line and fade all the way down. Then, hey, the next week's candle looks great. It pushes all the way back up and closes where? Below the T line. So when I look at that, I'm like, ugh, okay, you ate the wick, but you didn't close above that T line. Following week's candle, you have these two equal tops, and it starts to pull back. Probably looking for this previous wave's low. Then, of course, we have this week's candle. Wick the T-line, pull back, and now we're basically trading at the 5 EMA on the weekly. And why am I showing you this? I'm showing you this because if you're starting on the weekly charts, what you're going to discover is that you're going to take or get faked out less, I think. Partly because you're going to be on the right side of the bigger trend. And although these candles get you really excited, the green ones, we have to respect the filter that we use to help us determine trend. One of which is the T-line. And part of our rule in here is that when you're trading on the south side of the T-line and the 5 EMA, you don't go long. Now, a lot of you will try and catch a bottom, but it doesn't always work out, and this is kind of an example of it. So just follow the chart, right? You know, the one thing about this world is the more they change things, the more they stay the same. And there's so much noise around everyone right now. You know, there's so much noise, we're literally talking about the noise. So, and the noise is what? News, all that's outside influence. As relevant as it may be at times, it does just get in our head. And when you pay too much attention to it, it makes you do things that you probably wish you didn't. So it's that kind of, you know, stop, drop, and block out the noise. That's what we're going to do. We're just going to let the world do its thing, as upsetting as it may be at times. But we have to keep that out of what we see on our charts. And if you're looking at Bitcoin, there was no reason here you never got one of these on the weekly chart. So you just had to go with the flow, right? This is just the ebb and flow of the market. You know, you have a wave down, slight retracement, wave down continues, slight retracement, and perhaps here we go again. Now, if we're just using the volume profile, just see what happens when you fall into a volume gap. This could be a 5-minute chart. The outcome would be the same. What was price getting hung up on here? The shelf above, just chewing that up, and then it just gave it up, fell into the gap. These are low liquidity areas, right? So there's just nothing there to hold price up or down. And if you're looking at this weekly chart, you have to start to appreciate that ebb and flow and what these waves and retracements look like. The advantage that we have, or that you have, is that you can use this simple tool as a filter as well. And because we don't argue with the market, because it's basically telling us what's going to happen, we just do what we're told. Up here, you're told to sell. So you do. And you could, you know, whether you wanted to wait out this, that's up to you. But you know what? When you're in the driver's seat, that's the privilege that you've earned to make that decision. If you're in down here, you might feel differently about it. But because you took the signal, this turned out to be more than a trade. Excuse me, this was a pretty decent trade. This is a runner. Right, these are the things we, when you go to bed at night, you hope you wake up to. But just follow the chart. Block out the noise. Forget about what other people are saying about crypto, about Bitcoin, about markets, about risk, about this, about that. Everything that you need to know is right there, right in front of you. And how do we make these signals a little more valid and a little more secure and stable? Well, let's bring relative strength into the equation, where we're basically comparing the asset to other participants in the market as a comparative. But what we can also read here on our screen is per asset. So we can see the relative strength just essentially disappear from Bitcoin on the weekly chart. And that validates my sell signal in a very strong way. Price is going to have a very difficult time moving higher without any relative strength. And right now, this is a very slippery slope. if you're looking at this chart, you're going to start to get concerned if you're long Bitcoin that you see, because the chart's not going to make an exception for you at any given time. What you see here about price taking that hard down, going sideways, giving you the appearance of a reversal, but trend doesn't change, you fall into the gap. You're going to be faced with the same phenomenon here if you roll over and take out the previous wave's low and start to fall into this gap. To expect that this type of price action would not happen as you fall into the gap is naive. Excuse me. It just is. The chart does, the volume gap doesn't care how much of the asset we hold or don't hold, or if we're long or short, or if we're leveraged or not. It's just on rewind play, rewind play, rewind play. Break one level, find the next. Current price looks for past. First attempts typically fail. Price shoots up and down through volume gaps. Just follow the chart. Do what you're told. That's all we're doing. There's no magic here. So what we know is on the weekly chart, we're still bearish. We know what our downside risk is. The upside opportunity, this volume gap to the upside. And what do we need to do to make that happen? You're going to have to start trading above the T-line in a meaningful way with enough momentum that you can trigger a buy signal. And if you're using the Z-score dashboard, what you're looking for is that buy signal to be produced in and around the same time, especially on a weekly, that the relative strength breaks zero to the upside. Kind of validating that signal. Like here you have a buy signal and you break zero. That type of thing. Buy signal, break zero. Down here, same thing. And you can see how the relative strength helps keep price elevated. Right? And you can see as you're trading above the T line and above the 5 EMA, even though you have the odd red candle, you don't have any reason in here to get out of that trade because the trend's on your side. In this case, the trend is down and you don't want to be long until the trend is reversed. That's all we're doing. Right? It's literally as simple or as complicated as that. One of the things that we talk about is fibs, fractals, and filters. And I'd like to give you an example of how we can use fibs. And there we go. And sometimes, you don't have to be following a stock closely, or any asset for that matter. You're going to be able to see things instinctively. And when I saw this chart, and this is a chart of a company called Omnicom, and they're an advertising conglomerate, I noticed these kind of big swings. And what do we want to do as traders? We want to be able to trade those waves that we spoke of earlier. That in the other case, the wave down and then a little bit of a retracement higher and the wave down and so on and so forth. Well, one of the ways we can do that is with the use of Fibonacci's. So if we were convinced that we were taking that swing low and that this was the swing high, we're going to draw them here. And here's our 618 retracement. Basically the base of this big green candle here. So why is that important? Because it gives us a target, and I'm not using any averages on here other than what's on our script, but it gives us a target to the downside. Does it always work? Not necessarily, right? It's not pin the tail on the donkey. This is a real world, and sometimes things change. But once we started to roll over, because again, we were convinced that this was our swing high, so we're going to attach this, and price starts to fade. Big red candle here, finally enough momentum to trigger a sell signal. And what happens? Lo and behold, we come right back to 618. Now, I don't know if it's an accident. Is it a coincidence? That's not what we're going to talk about right now. The fact of the matter is, it doesn't matter. Is all you need to know is that it works. And this happens all the time. There's a reason why the people at Tradingview put the Fibonacci tool on your charts. Because it works. Now that we've seen the example of the pullback, why don't we just get an idea if this is the, let's take this and see, just out of curiosity, and see where we end up. Where does that put us? Where's 618? Back up here. So if price was to bounce down here, what am I looking for long? Well, that would be a respectable target. Not to mention the MAs that we might want to use depending on the time frames that we're trading or how we're trading, whether it be with margin or commons or with options. There's all those variables. But what I'm just trying to illustrate is just here's a simple way that you can use fibs. Because a lot of people will say, well, you know, the fib thing is interesting, but I don't really get how to use them. Well, it's just a real simple way. And I do this all the time. You'll see on our other streams where we've drawn fibs just to get an idea where price may want to pull back to, because we want targets, because what we want to do is make this as automated and as thoughtless as we can, right? We short at the top, pull back, there's your target, and you're out and you're done. That's it. Now, are we going to automatically take a long here to try and hit that other level? No. Why? Because this is still showing us that the downtrend is intact. So the proper conditions for the trade still have to be there. You just don't execute the trade just because. You want to make sure that this is actually turned into one of these again. And then it becomes a legitimate target. But that's a real simple way that you can use fibs every single day just to give yourself a target. Sometimes it'll break that level. That's okay, right? We're not concerned about the pennies. Because all we want you to be able to do is take your money off at appropriate places at the right time, every time. Right? That's really what we want to do. Now, let's look at the Dow for 1 second. Probably going to have to take the volume profile off. And there we go. So, we've shown this chart, obviously, for a little while. We talked about that, how that's the 4-hour signal, the daily signal, and these are sell signals, and then the weekly. I show this because I'm trying to illustrate over time how long these things take to unfold. Because one of the things we're all guilty about is analyzing or having conversations in a macro sense about each and every candle that we see at the end of close, including today. This is a doji candle, could be a reversal candle. We'll see. Time will tell. Here you have relative strength working its way back towards zero. Maybe you start relative strength starts coming back into the market. Maybe we produce a sell signal, then we're having a different conversation. But right now, this is still a very bearish chart. But these things take time, right? And when we're when we're analyzing each and every one of these candles and getting in the conversation of what happened on that day, it's going to be conflicting, because on Monday the 9th of March, that big green candle, that was it. That was a reversal candle for many, right? We're done with this. We're moving up again. And then we're not. On this day, the 18th, the sky was falling. And it felt like it. But you know what? Come back in here and it's not so bad. And each and every day we do that to ourselves. And sometimes on a micro basis. And you have nothing but a confused brain afterwards. You could have been in this trade, and this is why we look for 4-hour entries on the 12th of February. And then, as all you're doing is putting your feet up on the desk and watch it print for you. But you can do that because you were focused on a set of particular time frames. If you're scanning 12 different time frames constantly, chances are you won't even remember what time frame you entered on. So we focus on the weekly, the daily, and the 4-hour, where the 4-hour is that on-ramp onto the daily chart. We had a sell signal, we took it. Stayed, everything, you didn't even have to deal with any chatter in here at all, right? The trend held, and there on the 4-hour, here's our daily signal. You can see you broke zero on the 4-hour there. And now you're, 3-some-odd thousand points below where you were. And if you're short, like you should have been, you'd be really happy. Right? Only because you did what you're told and you followed the chart. It's not, again, let's not overcomplicate things. Right? We can try and frame up levels as an example. NAS 100. Now, we've had these kind of horizontal levels here for quite a while. And why did we drop them where we did? Well, it's obvious. We're just trying to line up some past price. In here, we're just kind of taking these wicks and this wick. Yeah, I could have taken the bottom of these candles too, for sure. But again, it's not pin the tail on the donkey. Could we all agree, I guess, that if we kind of broke out of this range, up or down, that it would be meaningful? Yeah, probably. Like we can see we've been here for a while after doing nothing but going up for a very long time. What does that tell you? Or what do you think it tells us? To me, this is just indecision, right? The market's kind of outlying or outlaying a level for us to the upside and a level for us to the downside. And we have to be happy to live in this range, right? Because this is what it is. This is what there is to trade. But we have to be very careful of breaking this level too much to the downside, because it puts us in a whole other place altogether. Right? We've broken the point of control, so we're trading below all of this aggregation in here, which is kind of creating this point of control area. That's the most dense volume that we have. So do we have two green candles? Yeah. These candles are just two green candles in a downtrend to me right now, because they can't get above the T line and change the trend with momentum, right? It's the momentum that does this. Well, they don't have it to the upside here. This has just been kind of a test and fail environment, but it's noisy looking. But because we believe in fractals, what do? Just grab a weekly, because it'll smooth out all of this chop. And now we can see, blow this up a little bit on a little more clearly, that is all we've been doing is giving these big extensions through the T line, and then at the end of the week closing below it, all while that divergence stays intact. So that's just further confirmation that your downtrend is intact. And what do you think the problem is on the weekly chart? And if we're concerned about trend, the weekly is really a good place to look. This, right? For those of you that aren't using a volume profile, highly encourage it, because you're going to see where the trading has and has not been, and how much trading has been there. This in here, this big gap, is a representation of a lack of volume. So if price gets into it, there's nothing there to hold it up. It's the weightlifter with the skinny legs. And price can shoot through here pretty quick. Now, we haven't shown any levels yet, right? Like, here's our weekly sell back at the beginning of February, and we're at the end of March. So this is another example of just take those weekly signals, right? You don't have to use a ton of margin or leverage to trade these things, because you're getting the benefit of the move and the time if you catch a wave like you see here. So you don't have to overextend yourself. You know, the the depreciation of price will do everything that you need it to do with less risk. So if we believe in some of that basic stuff, break one level, find the next, what do you need to know? Produce a sell signal. Oh, we throw on the moving average, and guess what? Well, we broke that too. Do we need to know anything else? What else do we need to be told? There's no reason to be confused. The only reason you're confused is because this weekly candle have these massive extensions up and down. And in here, this is just traders getting chopped up, chopped up, chopped up. Even in these. Because you know what those big wicks feel like during the day, right? Just as an example, maybe the bell rings, it's open, price shoots up for the first hour and a half, and then 10:30, 11 o'clock rolls around, and then the bottom starts to fall out, and it feels like the sky's falling, and everyone's trying to readjust their positions because of the sudden elasticity. 2 o'clock in the afternoon rolls around, and all of a sudden everything catches a bid, and everybody's reversing their trades, and then you get the games at the end of the day. It doesn't matter why it happens. It just does happen. And the best way to protect yourself is just to, stop playing with hand grenades. Like, this weekly chart is a real good example of what's really going on, right? And look, if this was back here, I'd be having the same conversation with you about what's really going on. Price is going up, don't bother shorting, right? But we're into something a little bit different here. This could just prove to be a minor retracement, and then you bounce, take out the previous wave's highs, and the beat goes on. That's completely possible. We have no idea what comes after each and every candle we trade. We just have to use this basic methodology to help us put a little bit of logic around what we see on our charts. And lo and behold, who do we see? The 50-day moving average on the weekly. First attempts typically get little support, right? If your price is retracing, you hope to get support or a bounce. If price is pushing higher and this is the first attempt, you'll get some resistance or a failure. But right now, you're hoping for support. And the first touches typically have the higher probability of getting that. So now all of a sudden we have a little bit of logic around what we see, regardless of these giant wicks that you see on this chart and this time frame that are causing chaos. And here we are at the start of this week essentially, and you've had enough time to reflect on the past month or so of all that chaotic extreme up and extreme down. And hopefully, as you're seeing it laid out like this, it starts to take away a little bit of the mania. Weekly charts are great for that. Got your sell signal, you broke one level, lo and behold, what happens? You found the next level. It just happened to be the 50, first attempts and all that stuff we just talked about. But if we just keep peeling this onion back, what's the next level down if we don't hold? Let's deal with that scenario first. The 100 MA. Where's the 100 MA? Right at the bottom of this volume gap. Why is that important? Because if you break the 100, fall into this, it almost not only does it put it in play, it makes it very likely, as long as the momentum stays down. Now, how did we know, or how do we know, that when price is approaching this major moving average that it was going to fail? Because of the divergence of these two as you approach the level, right? As they are open and they hit that 20 moving average and still open, there's nothing that's going to stop it. There's too much momentum. And now you're dealing with the same at the 50. And you can't look at each and every slight movement that the chart makes and go, oh, it looks like it's arcing higher. Well, maybe it is. But maybe it's just, rolling over too. So don't get drawn into the weeds on every little movement that you see in the chart. It's the macro sense that's really important. If you get support from the 50 now, what's your target? Well, you're going to look to the 20 again and the point of control. Because again, current price looks for past price. And if you bounce, this is an area of past price that it would be attracted to. Now, this is also the first attempt since you broke it. First attempts in this case would be a failure. We would roll over at the 20. Think about this. Come back and test the previous wave's lows and probably be testing the 50 again. And then you have a higher probability of failure. Right? So that kind of ebb and flow that we talked about. So that's the downside risk, the volume gap in the 100 MA on this bit of a shelf. And the upside opportunity is the 20, the POC. And obviously, if you break through that level, you're going to start looking at taking out the previous wave's highs. Right. And, sometimes I'm going to throw the 200 on here. So here's the 200 MA weekly, and it sits right along the lower value range on the volume profile. Now, for the last few weeks, we've been talking about various different charts about, well, geez, what would happen if we're going to come back to the 200 on, this time frame? And people would be like, there's no way, that's blah, 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 too far away. Well, is it really? Because if we take a really good look at how price behaves, I'm going to argue with you a little bit. This is Microsoft. This is the daily chart. So when you were up here at 550, 520, if we told you were coming back to the 200, you'd tell us we were nuts. I get it. But here you are. Not just once, not just twice, but now you've broken it. So not only is the 200 daily breaking it not your concern anymore, you have to start to look on other charts, because now you're into the 200 weekly. Now, again, at 550, if we told you were coming back to the 200 at 374, what would you tell me? Be honest. That I'm crazy. I get it. But we're not crazy. All we're doing is applying the language of the market to our analysis. That's it. So on the weekly chart, when you broke the 20, did you find the 50? Yes. When you broke the 50, did you find the 100? Yes. And when you broke that, did you find the 200? Yes. And what is the most basic bull bear indicator we have? The 200 MA. We're trading above it, we're bullish. Below it, we're bearish. Now, does this little extension beneath the 200 mean the sky's falling? No. Could it get support here? Absolutely. Like, again, it's not pin the tail on the donkey. However, if we start trading with momentum below the 200 with some sustainability, then it's a problem. And we should also notice that the T-line and the 5 EMA are completely diverged down and to the right with some momentum here. And we know what happens when you reach a major moving average when that takes place. it makes it very difficult for price to hold up. And here you are on the weekly falling into the gap. And here's our level, our target of 346. Why is that our target? Because it's all we were doing, because we understand that current price will look for past, right, until it can find a place that it can sit down and rest on. And those places are typically areas that have been support and resistance in the past. And when they reach them, if it's not a comfortable chair and they don't want to sit down, they're going to leave the room and look for the next one. That's what this represents. And as all we were trying to do is take this level of tops, kind of connect it through here. These are little benches of past price. And then we get a little wick extension. That's enough. That's all I need. I'm not suggesting that if it was to hit here, it would instantly bounce and take out the previous highs. That's not what I'm saying. It is just simply a target. So let's see how we do. Because when we broke the 20, our target was the 50. And because we knew the 50 wasn't going to hold, the 100 became our target. Lo and behold, that didn't stick. So here we are at the 200, and so on, and so on, and so on. And out of curiosity, something about the 1,000-day moving average. That's what that amber line is. Break one level, find the next level. Right? This is not anything that most kids couldn't do. Really, right? It's like, if this, then this. If that, then here. And if price reverses, it reverses. That's okay. Price can change its mind. But until it does, we have a pretty good idea where it wants to go. And if it doesn't hold at 346, assuming that it gets there, and, don't say, oh my gosh, that's like, you're at 370. No, you're not, it's 30 some odd bucks away. Yeah, well, you're several $100s away from where you were. So here we are. If this doesn't stick, just look for the next level down. Here you've got the lower value range on the volume profile. Doing exactly the same thing, right? Just kind of connecting those past levels. And if we break the 200 on the weekly and this gets ugly, well, then there's another target for us. So this is the unreasonable part. Because you went parabolic, it spread out all your averages. Well, the market, or let me rephrase that. The Fibonacci fractal filter world doesn't give a rat's behind about how much something went up, how quickly it went up, using this as an example. It doesn't care. It will treat price the same way as it moves higher in that scenario, and it will treat price the same way when it moves down in that scenario, regardless of how spread out the levels are. It's indifferent to that stuff. The only people that care about that is us. Price doesn't care. Market doesn't care. Fibonacci retracements don't care. Fractal analysis doesn't care. So it's just one level and find the next level. And the more that I try and emphasize how easy this actually is, for some reason people try and make it harder. We talk about relative strength. Is the relative strength in Microsoft's favor? No, it's not. It was telling you exit stage left. In order to have relative strength, you need some intent, and it's not there. And it doesn't matter why. Does not matter why. And is, Microsoft the only one that's having a problem or having a bad day? No. Here's Google. Same thing, right? Is there anything technically inappropriate on this chart that we don't talk about all the time in here? No. Bounce off the 200 on the weekly, nowhere but up. You're trading above all your major moving averages, so all your support. And even in here, okay, at some point you come back and you tag them. It doesn't necessarily mean you break down, right? That's just a retracement, and then boom, you take out the previous wave's high and the beat goes on. And you still have, there's another example, you still have all of that support, 20, 50, 100, and so on. And now you're seeing what happens when you lose it. All of that support becomes resistance, and that banging your head test fail thing that happens all the time. Another big wave up. And here we are today. You know, price is doing nothing different than it did at any other time on this chart. There's nothing unique about what's happening right now to price on the chart, other than maybe the velocity and speed, you know, and momentum that's pushing these things up and down. But price is behaving exactly as I would expect it to, or you should expect it to. But here's the best part. The best part is, because you know that, you can monetize moves like this to the upside, right? The weekly chart, the market's trying to figure out what it wants to do, and it always looks more settled in hindsight, right? But as these candles are forming, it's not always easy, but we wait. You get your buy signal. You appreciate the resistance that's ahead of you. The red candle doesn't scare you because, hey, did it break trend? No. By the end of the following week, you've already taken it out. Making a new high, right? Taking out the previous wave's high. And the beat goes on. Now, again, trading above all your support, and at some point in time, you come back and you start to tag these levels. Chart tells you to sell. We don't know what comes after the next candle. Just like you didn't know what was going to come after the next candle down here. You just have to follow what's in front of us. And quite honestly, this has been pretty easy to figure out. Pretty easy to figure out. So we broke the 20. What are we looking for? The 50. So, oh, here we go again. I can hear it. Oh, no, we're not coming back. It's crazy. That's too, that's too much of a hit. No, that's X%. You know what? I don't care. I don't care. The market doesn't care. When things were going flat like this and you got like zero movement, that was totally appropriate. And when you're doing this parabolic stuff and you come back and start tagging things, well, guess what? This is totally appropriate too. And the only reason people are complaining about it is because they're on the wrong side of it. And whose fault is that? Not mine. Just do what you're told. It's not hard. And here's the boring part. You just got to do it over and over and over again. Let's look at our friend ETH. Very different looking chart, right, than Bitcoin's. Certainly from a volatility perspective, I guess the framing of it is pretty much the same. But when you look at the daily, what's the upside? Targets to the upside. If you fail, then you come back down and you test this level, and if you fail the 50 on the daily, well, then we're having another conversation again, because you'll probably come back and tag those lows. But this is just a rinse, repeat, rinse, repeat, rinse, repeat process. Right? Over and over and over again. And all this volatility, like we've shown on some of these larger time frames, like on the indexes, on the shorter time frames, that's a nightmare for people. Because you're usually leveraged a little bit much. And anyways. Right? So make that become less of your problem. Right? Start it with the 4-hour daily, weekly, or weekly, daily 4-hour. With the understanding that, hey, I want to make the 4-hour, my on-ramp onto the daily. Well, this is Aster, as you're all aware. Everyone's waiting for this thing to go parabolic. Well, on our 4-hour chart, we produce a buy signal. And we've produced many of them, right, over the last month or so. Then this is merely consolidation. So what you're looking for is the one that's going to break out, right? We don't want to trade the chop. We're most interested in the ones that are going to turn into trend changes. And this is a great opportunity to use the Z-score dashboard, because what we're looking for is a break of zero to the upside. Start printing some green in here, showing us the relative strength is coming back in, while simultaneously, or close to it, printing a buy signal. Right? Those are the kind of conditions that I find are ideal for me. Right? So I would be particularly interested in this setup here. And if we're fortunate enough, so this is 24th, if we're fortunate enough to produce a buy signal on the 4-hour, that would start to show us that, hey, maybe we're going to push the T-line on the daily. Because remember, we want the confluence to the upside now. So we're in on the 4-hour, we have a good entry. If this actually converts into a buy signal on the daily chart, and we start, because we're twisting, right? All these averages are twisting. The chances of us getting a big move up or down are actually pretty good, right? That's quite often what happens. You wind them up and you let them go. So if it was to break to the upside, well, it's not going to take long to take out this level. So then you just continue to look to the left and find other relevant levels. Here you get into a bit of a structural area, right? The bottom of these candles, where it kind of broke down actually. So, these where price has been before is where it will be drawn to next. But we got to get through here first. So we pay attention to the 4-hour chart. This is our sneaky entry, right? This is the entry that you take when you kind of, a few days later on this chart, if you get your way and things start to break out, where you tell your friends you're in down here and they're like, yeah, right. But you were, because you're in on a slightly earlier time frame. And then if you're really lucky, not a lot of trading history here, but if you're really lucky, on the weekly, you get a buy signal, which the thing has never produced. So on the weekly, if you caught the first buy signal, maybe that's a good thing. It's worth a shot though, right? So just protect yourself to the downside and hope to get the confluence you need to go from that 4-hour, and you can start to see it breaking zero actually, from the 4-hour onto the daily, and then have the thing find its way onto the weekly. I'm sure you'd be super happy if you're able to catch that at the right time. I can appreciate this is frustrating, but you have to be careful how much of it you're trading. It's chop, right? It's chop. Let's look at Zcash real quick, because I know it's had its ups and downs of late. Here we are on the daily. Now I'm going to go to the weekly to take some noise out. Nice bounce at the 50, right? We like that. Like I'd wake up in the night for those green candles at the 50, but we haven't broken trend yet. So, you can see your T line, and yeah, it's fish hooking a little bit and everything, but we can see what we have to do. Break that T line. This broke it as well and ended up closing below the 5. So this is where we have to kind of keep our expectations reasonable. Could this be another, trigger buy signal and then create a wave higher? Sure, absolutely could be. Nice bounce at the 50 would make sense. Break it, and then I think you start to look for these levels down here. This volume gap becomes problematic. Right? But you catch a bid, break the T line, start looking for the levels up, like this level in here. That would count, the 20. So you can have some fun with this stuff when you're on the right side of it. It's when you're on the wrong side that it's a problem. One of the reasons why we don't take we'd be careful with the green candles. Um, you're not going to be, people will say, well, the entries, you got to have a good entry, got to have a good entry. That's true, totally true. But don't screw your entry up because you misunderstood the trend, right? Like you have to focus on this as a filter because it's telling you what the trend is. And regardless of how encouraging it might be at any given time, remember that we've seen this movie before. Just use Bitcoin as an example, where you get these kind of real positive movements, like even in here, and then it's a process, and it always takes more time than we like. Always takes more time than we like. XRP, same scenario, like still trying to find some momentum to pull us up above the T line. And this has been a long grind. It really has. So, you can only hope that when you get your bounce, it's the kind of bounce that you certainly want. Because this has been a grind. Now, if we look at Apple, weekly chart, is it bearish or bullish? Well, it depends on who you talk to, I guess. Right? Some will say, well, there's a double bottom. Well, there's 2 equal points in price, yes, but not necessarily a double bottom, technically. And are we trading below the T line and below the 5 EMA? Yeah. And we're still operating under a sell signal, and we're into some very, very weak volume up here. So whatever happens down here in regards to volume gaps and volume shelves, the same applies when you see the gray, but exponentially worse or better, depending on what side you're on. So this is starting to look like, hey, maybe you want to come back and tag the 50. It's not a straight drop to these levels ever, is it? Although sometimes, maybe the candles will argue with us. But it's the ebb and flow that you should expect. Still bearish to the downside. Green day today, but that's what the chart tells us right now. When we look at American Express, another one that's just been beat up really bad. Reasons why are irrelevant to me. Maybe in some sort of macro sense, but at the end of the day, the chart is telling me everything I need to know because it's a language. What is it telling us? Well, told us to sell. And yeah, we created that script to produce the signal. But we understand that when we break one level, we find the next level. And when we break that level, we find the following level. So are we getting support here? Somewhat, yeah. But can anybody identify downside risk? Probably. Right? That's what this is. And the 200. So this is the 200 weekly, remember. Did anyone want to talk about finding the 200 on the daily? No, nobody did. Well, now you're looking for 200s on the weekly, which should probably start to tell you that, this is ugly. Probably unnecessary and very ugly. Because most of what we're seeing in the markets right now is all geo, right? As in geopolitics. MasterCard, another example. Break one level, find the next level. The ebb and flow is the expected part, right? These are the tradable things. Want to take out the noise? Maybe swing trade it a little bit differently. Trend trade it. There you go. If you're okay being in the trade long for several months, right? That's the weekly. But the thing is essentially just done exactly what you would expect. Trading above all its support and then starts to break down. Break one level, find the next. Break one level, find the next. Stay out of the volume gaps because when you do, you drop quick. And lo and behold, there's the 200 weekly. So remember, breaking the 200 on the daily and trading down there, sustainably is bearish, period, on the daily. Same applies on the weekly. It's just more meaningful because the time frame is longer. It's almost unfair to look at the strategy chart. But did it do everything that we said it was going to do when our sell signal popped up? Yep. And, hopefully in the not too distant future, we're going to be having streams where we're going to be talking about price breaking to the upside and having all these conversations in reverse. But we see 2 equal points in price. Basically, if you didn't sell back here when you got your second chance, you were surely taking it. Brought it back to the 20 and failed, brought it back to the 50 and failed. Made a quick attempt at the 20. First attempts typically fail, and it did hard. And you knew it was going to because all of that divergence you see in here was all in place. Right? So to some, that's a flush candle, a fake out, whatever you want to call it. To us, it's just a red candle and a downtrend because we knew the trend was intact. And then you have no reason to long anything because price is trading below the T line and below the 5 EMA. And in here, looks like you're rolling over yet again. So there's nothing unexpected that we're seeing. It's just painful if you're on the wrong side of it because the swings are so intense. And I wish it was that much more complicated, and some people probably will make it so. Here's Visa. Weekly chart. Pretty simple stuff. It's obvious this is a downtrend, right? You're trending down. Whether I kind of like this, but it's pretty easy to see that this is breaking down level by level by level. Some things are clear, some things are choppy. But when you break major moving averages to the downside with philosophy, who cares about the chop? The takeaway is pretty clear. Make your way to the 1,000-day MA, perhaps. Right. Just like Microsoft. Thousand days, really? Yeah, really. And on the on the weekly chart, that 1,000 MA is probably going to put you somewhere on the 200 weekly. So when I say 200 weekly, it doesn't sound that extreme, although the time frame we know is extended. But when I say 1,000 daily, people lose their minds. Well, we live in a fractal world. Right? We live in a fractal world, and once you can learn to live inside of it, it's not so bad. Let's look at Walmart. And I want to show you this chart because another example of breaking one level, finding the next, right? And again, you're trading above all your support. But can you see that we've kind of got a nice little channel here? And so far, price has been respecting it. Now I'm just overlaying this as another mechanism to try and track and trap price. Still understanding that, okay, we're operating under a sell signal here. This was our daily. This is the weekly sell signal. Go to the weekly chart. So, we're getting a little toppy. Obviously looking for the 20 as a level on the weekly. And if you break down, well, you kind of see how this goes. But it's just candle by candle dealing with what's in front of you at that current time. Don't front run the chart. And it's when we front run the chart that we usually get our butts handed to us. Like it really, really, at least I'm speaking from my own experience. I shouldn't include everybody else. Let's look at Eli Lilly. Any surprises here? No. Right? We're obviously breaking down, trading above all our support, and then ultimately, it's a little cleaner look on the weekly, isn't it? But we're not going to argue with this big extension, because let's take fibs on this just for fun. And maybe we'll leave them here. Let's take this as a swing low, and take that as our swing high. Where's 6-1? There it is, right at the 50 almost. So can you kind of see whether it's a major moving average be it a simple, an exponential, a hull, the VWAP, fractal approaches, the way we filter. Can you kind of see now that it's all related, right? Why is 618 the golden ratio? I don't know. I don't have an opportunity to ask the guy. Is all I know is that it works. So if that's my swing low and I'm convinced that's my high, and I'm going to short, and there's a lot of traders I know that operate like this, they'll take that wick and short it because they're that confident in their fibs. Or inversely, they would long it, right? Flip your chart. But where would they be short to? 618. I'd be short to the 50. And when I throw my fibs on it and I see 618, I'm like, boom. That makes me happy. It's validation that the probability of that trade working out are probably on my side. And there's no magic to this. And if I throw on relative strength, do I feel even more secure now? Yes. Right? This relative strength was supporting price on the way up. The lack thereof, however, isn't doing anything to support it. So it's more likely to find these lower levels without any relative strength. And it's based on these standard deviations, like 2 standards up, 2 standards down. Sometimes they extend even farther. Like look at up here, right? You're almost, well, you were at 2.73 at its peak. And then it starts to fade. And the little upward movement in price, well, that's just the momentum. The freight train. You shut off the engine, the train's going to roll a while. Meanwhile, the smart money was leaving the building. Relative strength is gone. Absolute confirmation that you're into something else. And again, we're not doing anything magical. Right? I wish I could say we were, but we're not. Right? We're just reading chart, listening to the chart. We have no intention of trying to outsmart it. Here's NVIDIA, everybody's favorite darling. This is indecision up top, right? Because if it wasn't, price would be skyrocketing higher or plummeting down. Right now, it's trying to figure itself out. What do? We follow these signals and this divergence. And we break one level, we find the next level. So I don't really care about what people say about NVIDIA. I don't care about their annual report or their last earnings report. I don't give a rat's ass. All I care about is what the chart tells me. If you produce a sell signal, you break a major moving average, our filter tells you that you should be selling because you're trading on the sell side, then you take that short. Pardon my dog, guys. And then you got this big volume gap, right? You break the 50 and fall into this volume gap, that's trouble. And it's trouble for a lot of reasons. It's trouble because there's a lot of money in here, right? A lot of money in here. When I say a lot of money that's in your mutual fund or in the index itself. And if this thing rolls over, there's going to be a race to the exit. So many people are going to be trying to get out of such a small door that there will probably be some bumps and bruises along the way. So with this thing, NVIDIA being the one that's driven the market higher, and it is, right? There's like the usual suspects. This is one of them. This one really hasn't found its way even to the 50 yet, although it looks like it wants to. But it certainly hasn't found its way to the 200 like some of the others we've shown. So envision the Microsoft chart, how it broke down on the daily to find the 1,000-day moving average on the daily, which subsequently is essentially the 200 on the weekly. Again, we live in a fractal world. What would happen to the market if NVIDIA found its way back to the 200? Essentially taking it from that $190 stock back down to a $90, $95 stock. And time and price will come together somewhere in between. But to think that NVIDIA will never touch the 200 MA is the most psychotic thing I have ever heard. And yes, someone tried to tell me that. Like, just stop. Your love of an asset and how it makes the hair on the back of your neck stand up doesn't do anything for how price behaves on a chart. It never has, and it never will. Don't fall in love with what you trade. It is a means to an end. That's it. You have one job, and that's to monetize the chart. That's all you have to do. But you have to stay out of the fire. Like, stop, drop, and block out the noise. Just listen to what the chart is telling you, right? Everything that you need to know on this about this stock is right here. If you get a first touch support or bounce, is it possible that you could take out the previous wave's highs? Absolutely. That's your upside opportunity. Break the 50, fall into this volume gap. Does it make the 100 MA, put it in play and make it a little more likely? Absolutely. And so does the value range here and the 200. So to think that you'll never see the 200 on this time frame is just crazy. You will eventually. So there's a lot riding in this because of how much of the market's made up of it. All right, so this is going to be one to watch. It always is, but I think it's especially now. Because if this thing starts to break down, it could probably spook a few. And I think that's always a risk when we have this much uncertainty in the market. If everything was to calm down a little bit, I'm sure this thing would reverse in some way. And we'll be having a completely different conversation. But I think until then, we have to be very, very aware of where we are and where we're not. This is the S&P 4-hour, daily, weekly sell signals. You've broken the 20, the 50, and the 200. Diverged down and to the right. Little relative strength has come back in, but hasn't done much for price, and at the end of the day, this is still a downtrend. Look at it on the weekly, you're at the 50. Break the 50, we know what happens. Just like we said on the other chart, volume gap, 100 MA. So on that happy note, we're going to come back on Thursday, and we will see where we are with all of this. And I know it's 48 hours, but it feels like 48 months. So we'll see everybody on Thursday at 4 o'clock. You're all welcome to come into our Telegram and join us there. In the description for this video, as just like the last one, if you look, every link you're going to need to Tradingview, to TrendSpider, or to some of our crypto exchanges that we're affiliated with are all there, and they're all geo-friendly. So it takes 2 minutes to sign up and start applying what you've learned.